Hello traders everyone, welcome to our new webinar. It's Monday, September 30. It's actually last day of the month and quarter, so let me just know if everything works fine, please, in our chat box, either here on YouTube or somewhere else. Let me check our chats here. Hi Brian, Anas, VT, hey, how are you guys? So everything working well. Okay, so as you know, my name is Greo Horat. I'm owner and CEO of wavetraders.com. So if you'll find this analysis useful, please check our premium services here at wavetraders.com, or you can just simply go through some of our free charts that we always post almost each day here on our website, and you see what kind of markets we cover and how we analyze the stuff. Okay, so what's going on? As you know, the most important thing of the last week was obviously China because of stimulus. So they are doing everything what's necessary to support their economy. We know that real estates and their shares were down a lot over the last few years, and now it looks like that this has some temporary impact, at least temporary impact. We are seeing a strong move on Chinese markets, and this has obviously positive impact on other markets globally as well, and also in some currencies such as Aussie. So Hang Seng Index, if we look and maybe adjust to see where we are on a higher time frames, well, we are basically still here in the middle of a very big triangle. But I think that now when we are approaching when we are approaching the triangle pivot here, I think that we could start approaching the upper triangle line. So we see still, even if that's not really the beginning of a real strong push to the upside, there's still plenty of room for this wave D to resume higher, and this obviously will have positive impact on other global markets as well. But now, when we have seen such a strong moves and gains last week, we really should be aware that there can be some pullbacks in the meantime. There will be a lot of traders who will just want to ride this trade, especially those who will try to look at some short-term setups here, and most likely we will see some pullbacks. So it will not be easy trade, at least in the short term, and I just think that there can be some retracements. Now keep in mind that we have seen a very strong push to the upside on Chinese markets, but not that much on the S&P 500 and others. Yes, we have seen a push to the upside, but not really to the same degree here. And now what I want to look at is, as I mentioned here, Aussie, okay, because you know that I track currencies a lot, so definitely this kind of a reaction on Chinese markets are definitely important for the Aussie. And you can see here the correlations, okay, and basically at the top we have the Aussie, then we have the Hang Seng Index, who is making the powerful break to the upside. Then you have also copper, you have the S&P 500, you have gold. So everything suggests that we could see much more upside here on the Aussie. Okay, so if these trends will resume after any setbacks, of course Aussie could stay strong here. And what I really like, as I discussed last week, and I want to just recap this one, I still like Aussie versus Swiss franc, right? Because this one, as you know, everywhere is on hold. We have China is recovering now and can have a positive impact on Aussie, and then you have a Swiss National Bank who cut the rate. So I think, and I highlighted this one last week, that we could see more upside here. I'm still wondering if we can see some setback here, if maybe this range will resume for another few days. Then possibly this support zone that I will be tracking out very closely around 57.80 could still be very nice one for potential bounce. But if we'll see just straight push to the upside from here, then obviously most likely then we are already in a fifth wave, and I will have to forgotten on this potential setup. But overall, I still think that Aussie could perform much better versus Swiss franc. Now, as we discussed and also covered dollar yen last week, we said that we are in a recovery mode, possibly here in this wave B, which in my opinion still could reach higher prices. But then, as you know, on a Friday, following a new Japan Prime Minister who favors the hawkish policy, that's when actually Japanese yen bounced quite nicely and turned higher across the board. And I'm just wondering if maybe we will see some pullbacks on stocks, which I think it's possible, as I will show you on the next S&P 500 chart, what this could mean for Japanese yen and its crosses. Okay, I think that we have some very nice potential bearish formations, bearish setups on those yen crosses. But of course, for this to follow through to the downside, you also need to have the risk off mode. Okay, so if you will check some crosses like euro yen, pound yen, you can see that there were some very nice interesting sell-off from last week. And if now at the start of a new trading week we will see some pullbacks on stocks, which certainly can be possible, especially if we consider that it's end of the month, end of the quarter, we have seen pretty nice gains on stocks. There can be some profit taking going on. If this some sell-off would really happen, then of course Japanese yen could also strengthen further. Okay, so if we take a look here, firstly on the S&P 500 itself, and I also actually posted an article about this one. So what we have here is the S&P 500 cash market, and you can see that we have some gaps open here, especially the one in the middle. Now, usually those gaps are going to be filled in very soon, but if they are open more than a few days, then most likely they won't be filled. But if there are, let's say, 1 day, 2 days away, then or 3 days, then maybe they can still get filled. And what I see here, we have one open gap down here, which also comes in around the previous very important potential new support around 5,650. So I think that these gaps can still be filled on the downside, especially if we consider that we have 5 waves up from that lows. And we know that from an Elliott wave perspective, right, we have 5 waves up, then we can expect a 3 wave of retracements. And ideally, when this retracement will start to unfold, those gaps will be filled. So in my opinion, also end of the month, as I said, we have Japanese yen going very strong. And if this 5 waves up would really put at least short-term corrections on stocks, I think that yen crosses could see more weakness. Okay, so we need these stocks coming down to support our potential bearish case on yen crosses, right? Also, when it comes to October and you look at the seasonal charts, keep in mind that through September and August, we have seen a pretty nice solid gains here, okay? And of course, if we consider what's going on for October, maybe we could start moving sideways. Keep in mind that maybe markets could slow down a bit ahead of elections, and then maybe in November and December you could see a new push to the upside. So maybe now October could be the perfect time for some consolidation. And if that would again really be the case for stocks, I think the Japanese yen could strengthen further. Now, if we look here on these correlation charts, you can see that we have plenty of yen crosses compared to the S&P 500. And you can see here that was through July and August. You can see that everything moved into the same direction. So now if we think that this these yen pairs should move to the downside, or at least it can correct deeper here, then obviously we want to see some more serious selling going on stocks. That's not really the case just yet, but as I said, we have some very nice and beautiful patterns going on. Well, here is euro yen. Okay, we have seen a pretty nice sell-off from that resistance that we were tracking with our members. Keep in mind that that was the previously here from July highs, a very strong drop, clearly in impulsive fashion. Now we are just moving sideways. So possibly we are here in the middle of a triangle, and if that would really be the case, if we'll stay sideways for a bit longer here, I think that there will be opportunities on the short side here on the euro yen. And why I'm talking about the euro yen is because Keep in mind that inflation in Germany has softened. In France and Spain, we also had lower inflation. I think it was reported on Thursday, on Friday. So there are speculations that ECB can cut and again 25 basis points or so, and this could keep maybe euro under pressure here. And also when it comes to euro, of course, we have to not look at only against Japanese yen, but also versus the US dollar. And what I see here on the euro dollar pair, as you know, last time when we covered euro dollar, I think it was we obviously not I think, but I know that it was last Monday. So basically we said back then that when on Monday the prices were selling off here, that we said that's start of the new trading week. Most likely these are not real flows. The flows will be reversed maybe during Tuesday, Wednesday, and the next day we have seen a recovery and even prices retraced all the way back to these August highs. Okay, and now if we look closely here, I adjusted the wave count, and what I see is a potential ending diagonal. Right, so this ending diagonal, this kind of wedge shape here to new highs, suggests that maybe bulls are running out of strength here, and that sooner or later we could see some of a reversals. And if the euro would really sell off from, let's say that we get another push to the upside to fully complete this pattern, and if euro dollar would really sell off, then of course, if we'll at the same time we would have some risk of, I think that the euro yen should continue even lower. Now if we look at dollar index itself, obviously these are just short-term swing that I'm describing right now, right? The longer term charts is still showing bullish for the euro, but in the short term there can be some setbacks. Even dollar index, of course, I'm still looking that at some point we will see a break below these July 2023 23 lows, but you are now having some potential wedge formation running into this very important level, round figure at 100, right? So this certainly can maybe stabilize dollar for a bit, especially if we'll see some risk off, and then you will see a rally in 3 waves, and that would obviously on the opposite side would send the euro dollar lower for a pullback as well. I also have another wave count here on dollar index, which basically shows that maybe we are still at the end of an extended wave 3 rather than already in a higher degree wave 5 here. But even this one suggests that even if we are coming out of a triangle, that the downside should be limited and that we should be aware of a corrective rise. Okay, so if we get any kind of a rise, I think that 101.50, 102 area will be very strong potential resistance again for this dollar weakness to resume. Someone is asking for gold. Yes, I will take a look gold in a bit later. Now let's take a look on crude. Why I'm looking at crude is because, as you see, I'm talking a lot about yen crosses, and I think that even CAD yen could be interesting, especially if CAD would start weakening because of lower crude. Now if we look here on crude oil, keep in mind that we have been tracking this bearish triangle for almost whole year, and obviously we should stick with these bearish views after the prices has breached this lower trend line, and it was also retested from the outside. So that was a key resistance around $73, and if you take a look here on the 4-hour time frame, now here we have the 61.8%, which, as you know, it's the most important Fibonacci retracement level when you're tracking correction or pullbacks against the previous 5-wave drop. So that was the 5-wave drop that we labeled from end of August, when we saw a completed triangle pattern here. Then we have seen this pullback, and you can see that that area around 73 was the perfect resistance. It was the triangle trend line, it was the 61.8%, and also we came quite close to this falling resistance line as well. And now when we have this very strong sell-off, I just think that that's an impulse, right? So if you go to the smaller time frame, you will be able to count this as an impulsive price action. So it means that you have 5 waves down here. It means that even if there would be just short-term weakness, okay, it doesn't mean that you should see a very strong drop into wave 3 or 3 or whatever, but even if that would be some kind of a wave C of a different wave count, still market should continue lower and should breach this 67.70 swing close from last week. And this could possibly have a very bearish impact, not very, but maybe at least short term on CAD. Okay, and now if we look at CAD yen, also similar idea like with euro yen, we have potentially completed 5 waves down here, followed by sideways consolidation, which could be a triangle. Okay, of course, it's a bit too soon maybe to say that this is really going to be a triangle because we are still maybe in the middle of potential wave D, but who knows, maybe this will be a triangle in wave B and you will see much higher resistance retested around 112, 111. But still, the rise from that August lows is most likely corrective. It's on a lot of yen crosses. Now, only the question is if we'll really see some risk off flows, then I think that those yen pairs will see much more weakness. They have a very beautiful, very bearish structure, but we still need some other assets maybe to confirm this look, because just one or few hours of potential sell-off, like it happened on Friday, may not be enough to say that, okay, Japanese yen is now going straight to the upside. It will be a different story if you will also see yen crosses following the, stock market following the same similar pattern, right? Now, someone asked for gold. Okay, so here's gold. Now, short term, still we have a very nice, beautiful uptrend. There is no reason to fight this trend, okay, but it's definitely very important to be very careful and cautious up here, because keep in mind that there's a lot of optimism, as you know, on metals. We have seen silver printing new 2024 highs. I'm not really sure if someone wants to look for potential maybe long opportunities in that area. If you're more intraday trader, short-term trader, then yes, maybe that's not really important. But if you're looking to position yourself for, let's say, for a few weeks, few months, well, keep in mind that we have seen some very nice gains recently, and that sooner or later there should be some pullbacks. And if I look on a daily time frame, keep in mind that we have some very nice 5 waves up here, extended waves from October lows, okay, of 2023. And we are now moving here, trading close to 2,700, which is the potential FIP resistance area, especially if we also consider that we are coming out of this triangle consolidation here. So in the next few weeks, maybe we'll see this top formation here, the temporary top. Keep in mind that I'm tracking this basic technical chart for better visualization here, and you can see that I think that we are in the late stages of this wave 5 of an extended wave 3. So sooner or later, this wave 4 will show up. We're looking for the similar pattern when we were trading around these highs here. So I think that there is a risk that we will see this retracement, okay, that we will see pullback. So be very careful. But as I said, if you're looking more for want to discover some short-term setups, then I certainly think that you should keep an eye on levels around 2,600. Okay, that's the round figure. It's the 38.2%, and also it was the swing high here. It was this spike when Fed announced to cut the rates. Okay, so I think that area is very, very important. So for this current uptrend to stay in play, that is now in place since August, I definitely want to see these levels to hold after this pullback, which still can be a wave 4, and then you see a final push to the upside close to 2,700, and then I would be expecting a top. But if suddenly we fall back below 2,532, then we will know that most likely the top is already in, because if wave 4 is unfolding, then it should not fall into the territory of a wave 2. Because then this would not be an impulse anymore. It can still be a motive wave, but not an impulse. And this would probably suggest that because of overlaps, we are in a very late stages of this recovery, and that corrections should unfold. Okay, let me grab some water please. Any chance you could look at just me please? We shared this one. Go to blog post. Here you can check our Wave Traders blog post. You can see it here, or you can just also let us know on Twitter, because I think we also shared some charts there. If you want to look at these blog posts, make sure to check this maybe article for the S&P 500, where I also talked about these gaps that I described and analyzed earlier. Okay. Now, let's take a look on some of single stocks. Semiconductors still in uptrend, and as you know, we have been looking for this recovery. We anticipated a break to the upside, either into wave C or wave 3. I still don't know which wave is it. Okay, I will not say that we are going to all-time highs exactly from here. I just always try to analyze the market step by step and not too far into the future. Okay, and why I want to look at step by step and more closer and focus more on closer levels here for the moment is because we have this unfilled gap from July that I've been repeating a few times in our webinars. So these gaps usually very important potential resistance. You either see a very strong move through it, or like in most of the cases, you will see that these new flows in these gaps, these unfilled orders, will also change the flows here. So firstly, it acts like a magnet, and then market reverses away from it. So this still hasn't been filled, and it has room for more upside here, in my opinion. And now if we take a look maybe on AMD here, also very similar situation. We have seen a very nice bounce as expected from that FIB support. We could either be in a wave C or maybe even a wave 3, but be very careful here up in that area. I certainly would rather stay aside, or rather than looking for any kind of a new trade once we are in that region. But if someone is long, then certainly maybe want to be aggressive on stops here, or even book some profits for end of the quarter. Now if we take a look on nvidia, we also shared nvidia on our Twitter, so make sure to keep an eye on our Twitter updates as well, because sometimes we cover some stuff that we don't publish, or even on our free website, or even on our webinar here. So maybe there will be published some counts or analysis that I spotted just whenever I'm scanning through the market. So last week we talked about the nvidia. We said that this is the potential resistance here at this red trend line at the 61.8%, which is actually it's measured from wave B from end of a wave C. Okay, so that's the distance of a wave B measured from end of a wave C. That's how you should use the fib levels in triangles. Not always, but that's how the textbook triangle should act actually. So the 61.8% and the trend line came both in the same region here, and we are seeing some sell-off. So again, maybe we'll see some risk off in the near term, but still this could be a very nice wave E pullback. The higher time frame wave count still shows that there is room for more upside, especially when you have this consolidation. And these kind of consolidations are very healthy because they will try to confuse traders. I'm sure that there are a lot of traders who were buying after these earnings. As you know, we've been covering this one a lot. In February, after earnings, market moved to the upside for a week or 2 weeks, then it pulls back to this earnings. So a lot of bulls have been sucked into the market here. I'm very certain that similar price action, similar sentiment pattern has unfolded here as well after earnings here in May. Okay, so also we have seen then after strong earnings, market has seen push to the upside for a few weeks before it completely price came back to this even slightly below this earnings release date. And then we had another earnings, also very strong one, but what happened? Well, market just made the opposite reaction. So I'm quite certain that a lot of traders are trying to ride this trend, but of course it's not always easy to look and join this trend, especially if you are looking more for some kind of a short setups and want to catch the longer term trade. So I just think that maybe this kind of a triangle is now ideal, the perfect one that will try to confuse traders and will try to get rid of both sides, of those who are long, those who are short. Okay, so more messy with price action we'll see, less traders will be interested to trade this market. And that's when actually I would most likely look for potential triangle to come to an end, when no one would expect the breakout. Okay, so I think that it has a perfect potential triangle here. Of course, we are still missing this wave E. So if we can see a bit of more weakness, maybe 110 is the first support. And then if we see a bounce and start breaking this wave, this swing high around 128 or so, I think that much more upside potential is coming here. Now let's take a look on Alibaba. Because everyone is looking for this one, that's why. And we also have been posting a few bullish counts in the last year or so, because we saw a very nice and strong recovery here back in 2022, 2023, and then our retracement has been in 3 waves. And now it looks like that we are in this third leg to the upside, still room for more gains, but not really sure if that will be a very strong new bullish phase, bullish cycle, but at least we could retrace back towards these 2023 highs, and then let's see what happens up there. But if we consider what I've been saying about Hang Seng Index, that we could still be in a triangle, then you know that these levels around 130 could definitely represent a very strong resistance if we see move into that area. Now let's take a look also on a few more charts here. I think that that's the one I want to look. So that's Bank of America. Okay, I want to, because earlier I said that maybe we will see some pullbacks on stocks, and I also scanned through some of the financials here, and you can see that Bank of America has made this very sharp fall, and now we could be in a corrective phase. So I think that we could see a bit of more weakness. At least wave C to the downside is missing. Now if we take a look also on Visa here, what we see here, well, we have potential 5 waves up, very nice spike, temporary spike to new high, and a sharp reversal. So this one also suggests that after rally we could see a correction coming. And now if we take a look here on these correlations, check at financials here. Okay, so at the bottom we have the S&P 500, and I'm actually comparing this data since start of September. So you can see here that we have the S&P 500 moving to the upside, and look at the financials, okay, here in black. So basically they are lagging quite a lot compared to other sectors. So financials are looking very bad, and if financials, as you know, are very important, if financials would really start weakening further, then I think that this could at least short term have a bearish impact on other sectors as well. Now let's take a look on cryptocurrencies. So finally we have seen some interesting moves last week, and firstly I want to look at the crypto total market cap, just to give you the clear, or just some kind of a recap of where we are. And still we are in a wave 4, we are waiting on wave 5. It doesn't mean that we will see a straight move to the upside from here, but if we try to focus and analyze maybe what may happen in the next 2 months, 3 months, I still think that this time for a bull run is coming, and it's not over yet. Okay, but what's interesting is that if you compare the crypto total market cap versus others, you can see that now, when last week we have seen some recovery, we are seeing this ratio moving to the downside. So it looks like that there can be some alt season going on. It doesn't mean that Bitcoin will stop rising. It just means that other altcoins that have seen very deep pullbacks a few months back are now starting to recover. And I think that with more upside potential on total market cap, I think that even altcoins have plenty of room for gains there. Now if we take a look on here on this liquidation heat map, as we discussed last week, there's still plenty of stop losses around or above 70,000. So as you know, those who are short have to be stopped out before market may actually find the real direction. So at least in the short term, I still think that we could see this level tested, but it doesn't mean that we will break straight through it. Okay, there will be some back and forth moves, because you know that everyone is just expecting that Bitcoin will move straight to what, 80,000. Some either calling for 100,000, and certainly I just doubt that this will be just one straight easy line here. If we look at the wave counts here, and maybe time cycles as well, so it's a wave 4, and usually after a period of consolidation that lasted through most of the summer, then October, November were the breakout months. Okay, and you can see this red line that I'm expecting maybe the breakout, something similar like has happened here back maybe a year back, and especially if we consider that we have elections when stock market generally can do well, and that's when also Bitcoin can start producing these gains here into the fifth wave. Now, when it comes to the short-term wave count here, so here what we are seeing, still potential more upside. Now you are seeing some pullbacks here. Maybe some tried to play it on the long side after breaking above 65,000. So the breakout trades, especially when you're in the middle of a very big range, it doesn't really work well here. But if we are now in this retracement, then definitely this is now the support around 63,000. You have the previous swing lows. So I'm looking for another push to the upside here. But of course, if you know what's the Elliott wave rules are, then when the impulses are invalidated, if wave 4 trades into the territory of wave 1, and that's when we know that the trend has been validated, that something else is going on. Even could be bearish, even could be more sideways. Keep in mind, we are basically still in a very big range on Bitcoin, not really bullish, not really bearish. And if this invalidation is triggered at 60,000, slightly higher, then unfortunately we will just have to adjust the wave count and just be even more patient. Okay, so if you're long Bitcoin, if you're a short-term trader, then definitely that's the level you should pay attention on. Regarding the second wave count, or what I may look for, if we will see an overlap with this invalidation level, then who knows, maybe we are still going to see a print of this 50,000 even. Okay, and before we potentially may see a recovery, because always when you have a deal with an overlapping price action, it's very, very tricky to say or to find the right timing when the bull run will occur, especially when you have from the most recent swing lows rise in 3 waves rather than in clear 5 waves. Okay, so I think you have to be very careful here and not trying to catch some upside here with very small stops, because it won't be an easy job. Okay, it's completely different story when you have prices trading and breaking out of this consolidation, but for now that's really not the case. But 68,000 could possibly produce straight push to the upside towards 72,000, where a lot of stop losses are placed, as I discussed earlier. Now let's take a look on Ripple. Ripple has seen some recovery. We also covered a few times this one in the past. It's really not moving much if you look at these big time frames, but I think that there is still potential breakout pending here. And what I would be watching for is this trend line. Okay, or these levels, maybe even better to focus on these resistance levels around 75 cents. If we can pass this one, then I think that much more upside here on Ripple can be seen. Also, it was sometimes since we looked at where it is here. It looked at Solana. Now, why I'm looking at this one and why I always bring it on, because whenever I'm analyzing the price chart, whenever I want to look for potential trade setup, I want to look at the markets with a clear wave structure, with a clear wave pattern. Okay, so it means I want the price chart which will not allow me to have a multiple different wave counts. Now, if you try to focus on this one, you have a very clear uptrend, right? So it's a strong uptrend, higher highs, higher swing lows. You have a very strong impulse in the middle usually that's a way free. And then you have a period of a pause, of consolidation. And if this pause is structured by free waves, like in our case, then this is known as a contra trend movement. It means that the whole pullback should be fully retraced. So as I said also a few weeks back when we analyzed this one in webinar, I think as well, I said that 163 is the potential breakout point here. We retested it once, we came back to the downside, but with free waves. If we can start producing gains here in the near short term and seeing not only one daily close price, you probably want to see maybe 2 free daily close prices above this level, because as you know, cryptocurrencies are very volatile. It's not like an FX when you see strong move to the in one direction, breakout levels are confirmed with a daily close price, and then you can expect more upside the following day. On cryptocurrencies, it's a little bit different because they are volatile, very volatile. They can produce a lot of gains in a very short period of time. It means that those gains can also be very quickly reversed. So you want more stable price action, meaning free daily closes, continuing price action above your potential breakout level to make sure and call it this as a breakout. Okay, so if let's say in the next few days, if by the end of the week we will constantly trading above 163, I think that the new highs here are coming. Okay, traders, thank you for this webinar. I think that we shared a lot of information. I was quite quick with what I see. I had everything on my list here. So I really hope that you enjoyed this webinar. If you're not our member yet, make sure to check our plans here. We have this FX or cryptocurrency service. We are also preparing some other services as well. So make sure to check this out, test us for a trial, and hope to see you in our members area. If not, I will be here on Monday again. Traders, enjoy your day and talk to you soon.